Welcome back, everybody, to another episode here at Coin and Capital. We talk about macro, finance, crypto, whatever's going on in the world that affects stock prices. We talk about it. We give you the data, the headlines, the charts, and we deliver the truth behind the noise, the signal in the fog. That is what we are here to do to make your life easier. And today, guys, we have a lot to cover in this video. We're going to go through some stuff about the US, new updates in Canada, finally, and then we're going to finish off talking a bit about the crypto markets and some pretty bad calls I made last week. So, strap in, let's get right to it. Off the rip, Federal Reserve issues FOMC statement. In that statement, Powell was discussing the end of QT by December. Okay. Top left chart here, that white line chart, we have the Federal Reserve balance sheet, which is the main function, the main mechanic of QE and QT. For those of you who don't know, that is quantitative tightening, quantitative easing. One of the most known mechanisms for which the central bank, the Federal Reserve, injects liquidity, so dishes out liquidity. They do that by purchasing assets. So when that white line goes straight up, liquidity is added to the system like they did in COVID, $6 trillion of that. When the white line is trending down, QT is active, quantitative tightening is active. They're letting those assets roll off their balance sheet effectively. QT is ending in December. We need to keep in mind that the entire macro backdrop has been functioning with QT running in the background. Now, yes, they've figured out ways to allow private banks to be one of the main lenders and liquidity providers while they let this QT run in the background. But still, that's like driving a car with 3 tires. Not as efficient. You might get to the destination, but not as efficient. Now, there's a few things I would like to point out. Below the balance sheet chart, we have the dollar, right? This year, the dollar had probably one of the worst performing years, right? It tanked probably now 10% end of year. Crazy stuff. Now, the dollar, the DXY, is one of the best indicators for general liquidity conditions globally and in the markets. So when that trends down, there's more liquidity. When it trends up, liquidity squeezes. So, 2 major factors, right? Dollar trending down, meanwhile QT actively absorbing, pulling out liquidity from the system. I'd say we've done pretty good this year for those 2, pulling factors. Now, QT will end, and we can expect, what I believe, further falling of the dollar, right? Because we have a bunch of fiscal spending needing to take place, a lot of debt refinancing needing to take place, and a weaker dollar helps all of that. Back up to the federal balance sheet. Yes, those are Fibonacci retracements. Yes, I'm doing technical analysis on a balance sheet chart. Deal with it. Something is really interesting to me here. Every time the Fed prints money, they allow the balance sheet to roll off to no more than 50% from the previous leg up, which is pretty significant, right? They don't let it roll off to the bottom. 50% at best. That's a recipe for disaster, right? You print 6 trillion, you let 3 trillion roll off, you print another 6. Okay, you're at 9, right? You do that again and again, and it compounds greatly, which is a recipe for disaster. Something to keep an eye on. To Canada. Some things have finally happened in a country that nobody seems to care about in the macro world. Government of Canada releases budget 2025. Canada strong. Yeah, guys, Canada strong. Basically, what that report outlined was a tremendous amount of fiscal spending. A tremendous amount of fiscal spending. And when we go back to this chart, QT ending, weaker dollar, and all those fiscal spending plans in the US, we can see that I think most of the globe is going to follow suit. Being Canada as well. To the right, USD CAD pair. Again, guys, when we have a weaker currency, makes fiscal spending a lot easier to do. So we should see the Canadian dollar come down to around probably 69 cents. I wouldn't be surprised, to the US dollar. But back to the budget. The budget outlined about a $76 billion deficit 2025-2026 with focus on housing, security spending, security and defense spending, believe it or not, as well as industrial capacity. Which is interesting because we've been talking a lot about industrial capacity from the US being a national security threat. And I think that's going around the circles now, and people realize having a strong industrial base is crucial in today's day and age, especially with the rise of AI. If we don't have data centers, we're screwed. One thing I thought was also interesting in the Canadian budget drop, the talks about stablecoins, pushing some legislation to get them approved, some frameworks, some blockchain rails ready to go. Canada government commits to implementing open banking in budget 2025. The federal government has committed to advancing open banking in Canada by introducing legislation to complete the Consumer-Driven Banking Act and extend the framework to include payment initiation by mid-2027, while oversight will be moved to the Bank of Canada. Open banking, but oversight by the central bank. Something about that doesn't sit right with me, right? If we wanted peer-to-peer transactions, we'd use something like Bitcoin. And we do. What we don't want is payment rails that still have oversight from the centralized authority that got us into this mess. Something to think about. Back to the US-China trade war. They just came to a deal November 5th from Washington. Last week, President Trump delivered another win for the American people, safeguarding America's economic and national security by reaching a trade and economic deal with President Xi of China. This historic agreement includes commitments from Beijing, ranging from securing long-term purchases of U.S. soybeans and other agricultural exports to effectively eliminating China's export controls on rare earths and other critical minerals. To the left, we have the 10-year risk pricing in the bond market, right? That's what the bond market does, prices risk of a country. The bond market liked that. Despite having the Treasury buyback distorting some of the signal from this market, the bond market liked this news this week. On to crypto now, guys. Few headlines, few visuals here. Trump says he wants US to be the Bitcoin superpower, cites competition from China. Bernstein projects USDC stablecoin supply to triple by end of 2027, capturing 1/3 of market. And on the very left, total stablecoin growth for all time. Few things going on, guys. I heard from some podcasts that the real battle between the US and China is for global settlement layer. What is going to be the new settlement layer of the new age economy? China wants it to be gold. Trump, the US, really wanted to be Bitcoin. If we run with the Bitcoin narrative, what do they need to do? They need to grow the stablecoin supply. Where is it? Right there. Capturing 1/3 of the market, just USDC. Total stablecoin growth, all-time high. So the states need to grow the stablecoin market so they can stuff all of their debt into these stablecoins and effectively claim Bitcoin as the West settlement layer for trade. Very interesting thought to think over. To Bitcoin itself, and the blunder of a call I made last week. A few things I want to discuss. Last week, based on technicals, we had come to the conclusion that this week would have been quite the bullish uptick in price. However, that wasn't the case. Why is that? I failed to see that we were in this accumulation range, and before the next leg up, we needed a manipulation, which came this week, right? So if you guys remember, markets move accumulation, manipulation, displacement. Accumulation, manipulation into full discount now before the next leg up. We'll keep it updated. There's more I want to talk about because there's some interesting things going on in the Bitcoin world. A lot of Bitcoin is changing hands, and I think it deserves its own video, so stay tuned. But I think now we are properly poised for an accumulation in this discount before we see higher prices. Why is that? Well, we run all the way back up to the first slide. End of QT, so the balance sheet stopped shrinking. Weaker dollar. And then risk pricing in the bond market is settling, right? All of these trade war narratives are coming to a close, hopefully, for the foreseeable months. Meanwhile, the Treasury is actively buying back bonds, which takes downward pressure on term premium, and we will see yields come to 4%, hopefully lower. All of which conducive for liquidity. All of which leads to more stablecoin growth. All of which leads to higher Bitcoin prices. So, this week, yes, the markets trended down. Altcoins got smacked. Yes, Bitcoin dropped like 10%. Okay. Clean slate. Manipulation leg from what I can see from the data we're given from price is done. Fundamentals are looking stronger and stronger by the week. Very supportive of liquidity. Putting in a nice tailwind for Bitcoin headed into the next few months. So, if you guys enjoyed this video, drop a comment down below. Let me know your thoughts. Let me know what you guys want to hear more of on this channel. Drop a like, hit that subscribe button. Catch you guys in the next one.